What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we're starting to see a pullback from the critical resistance level that defines this bear market. Are the bears ready to start pushing us down for that next leg lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.44%, and as you can tell from the chart, the bear did take a big bite of the price action today because SPY was trying to break above that critical risk level that defines the bear market at 390. Now, as you can tell, the bulls are not out of this fight just yet because we are still above a rising support trend line. So there will be critical support for the bulls down here right around 380 and 378. So you cannot rule the bulls out until SPY starts breaking down through this critical support, and you cannot rule the bears out until the bulls push through SPY 390 and start marching higher towards filling the gap at 408. So right now I view this market as a trading range between about 378 up to about 390. And the bulls will start looking a lot stronger above 390, and the bears will start looking a lot stronger when SPY breaks below 378. It's really the best way to view the market right now, and everything in between this is more than likely going to be a volatile trading range for who knows how long. So that's why I always tell you, wait for the price action to confirm the next leg. If we get the next leg higher, we'll see SPY breaking above 390, and to get the next leg lower, we should decisively break below this risk level at 378. Now below 378, we'll be looking for the 20 simple moving average at 372 and the previous lows right around 358. Remember, going back to the 200 weekly moving average, that is what caused us to get this strong bounce that we're currently in. And as long as SPY is above a rising 200 weekly simple moving average, it is more than likely that we are indeed still in a secular bull market. So do not rule out the bulls bouncing off of this very strong support level. If we turn around, break down through support and start heading down lower, then we can instantly get a lot more bearish. But right now the bulls are doing everything they need to do in the short term. And of course, tomorrow we do have a huge catalyst with FOMC. So watch that critical risk level of resistance at 390 and the critical risk level of support down here at 378, and then be ready to act no matter where we go from here. On the Nasdaq 100 triple Qs, we were down 1.02% today, and as you could tell, the triple Qs had that strong rejection from the resistance at 282. Just like SPY, we have a critical risk level which is up here at 284 and a critical support level down here at 272, and then below 272 we'll likely start heading down to retest the lows in the 250s. So wait for the bulls to break the resistance at 282 to 284, or wait for the bears to break the support at 272, and then act accordingly, because the next leg in this market is likely going to be decided in the very near future, and you're going to know which direction it's going to be because you're going to see it happening in the price action on a break below one of these levels or above one of these resistances. So be prepared, have a trade plan that is ready for anything, and the bull breakout in the triple Q should take us to battle the big bear at 293. But as you can tell, the triple Qs are still relatively weak because they cannot get back over the negatively sloping 50 EMA. On the Dow Jones DIA ETF, we were down 0.31%, and as you can tell, the Dow Jones is starting to find selling pressure after this very impressive bull rally. But we are also still above the 200 simple moving average and this support level at 324. We have a very vertical look here, but it is because we did get that very impulsive double bottom breakout. And right now the Dow Jones is bullish as long as it's above this support trend line, which is going to be right around 322 to 324. Below that, we have critical support at 319, because if we break below that, we'll more than likely come down to the gap fill area at 311 and risk level at 312. To the upside, the next bull breakout is going to require a break above the resistance trend line that defines the bear market at 333. And then above that, look for the gap fill at 336. On the Russell 2000 IWM ETF, we were up 0.14%. And as you can tell, the Russell 2000 still has this confirmed double bottom breakout above the neckline at 176 with a valid price target at filling the gap at 188. We're finding resistance at the resistance trend line at 185. And above that, we also have resistance at the negatively sloping 200 simple moving average at 187. Critical downside support remains 178 and 176. And you can stay on this bull as long as we are above that risk level, but you are taking on a lot more risk as we near the price target and get farther away from the support level. On the ARKK ETF, we were up 0.03%, and as you can tell, ARKK gapped up to the critical resistance right around $40, which is this negatively sloping 50 EMA, and instantly found sellers back down towards support at 38. The bulls need to break above 40, and then they can make a run back up to about 43, and the bears will want to break down for that next leg lower and try to break below 33, which is going to require a breakdown through support levels at 38, 36, and 35. On the VIX, we were down 0.27% as we continue to see the VIX getting crushed down and losing that bull trend as we're heading down towards VIX levels of 24. As you can tell from the chart, the VIX is very beaten up, so there could be the possibility of a short-term spike in volatility as we go into FOMC, which is more than likely going to be a very volatile period in the market if we see the VIX spiking back up above 28. While the VIX is below 28 and heading towards 24, it does favor the bulls because it does tell us that fear is surely leaving the market. On Bitcoin, we're currently down about 0.16%, and Bitcoin is still holding that breakout look above the resistance breakout at 20,000, and we still have a valid upside price target at 22,000 while Bitcoin is above this support at 20,000. And then if we break down, we likely come back down to the support at 19,000. On Amazon stock, we were down 5.52% as Amazon lost that support level at 102, came down to retest the previous low just below 98, and did close at a brand new 52-week low on increasing volume. The next support level is a long ways away down here at $88 unless we find support somewhere between now and there. We are looking for a falling knife scenario in Amazon stock. You really shouldn't be getting bullish until it can at least get back over 102, and then it will have an upside gap to fill right around 110, but don't expect that gap to get filled while we're in such a strong downtrend. On Microsoft, we were down 1.71%, and you can see Microsoft also looks relatively bearish today because we did get rejected from a negatively sloping 20 simple moving average at that resistance level at 236. We lost support at 233 and we're well on our way back down towards the next support around 225 to 226. And below that will very likely come down to retest the low at 219. Watch now upside resistance at 233, 236, and 242. On Nvidia stock, we were up 0.34% today, and Nvidia is hanging around that breakout level where it broke back over 134, and so far it's holding that level as support, which is looking like we could see a bullish bounce back up to fill the gaps in the 140s. If at any point we lose support at 134, look for the next leg lower to come back down to about 125 to 122. On Tesla stock, we were up 0.12% today, and Tesla was trying to get a bull breakout above resistance at 230, but found way too many sellers in the upper 230s and we're right back down below that resistance level. If Tesla starts closing above 230, it should make a run up for the 50 EMA, which is currently sitting at 248. But while we're below 230, we're looking for a retest of support at 222. And on a break below support, we're looking for a retest of the lows at 209 and 205. On Apple stock, we were down 1.75% as Apple is continuing to see that rejection ever since it hit the negatively sloping 200 moving average, which was that resistance right around 157. We're back down below support at 152, but we did see support holding up at 150, and we are still above the support trend line. If Apple loses support at 150, look for a retest of the support at 147, and below 147 will very likely come down to retest the low at 138. On the financials, we were up 0.26% as the financials are trying to close the gap above at 34.42, and we should instantly find resistance around that zone once that gap is filled, and we are slowly but surely building up a bull trend. The industrials were down 0.1% today, trying to break back over the 200 moving average and close the gap above, so we are coming into some very critical resistance here. The healthcare sector was up 0.06% today, continuing to rise above the 200 moving average with that next resistance just above at 134. The energy sector was up 0.97% today, getting very close to our price target at 92, and we are in the bull trend, so you can stay bullish now as long as we stay above about 87. So jumping back over to the S&P 500, without a doubt, tomorrow is going to be a very strong catalyst for the next leg in this market. And right now, we have no clear direction on who is going to win this battle at the critical bear market resistance level of SPY 390. Remember, this is still a bear market while SPY is below 390, which means there is no reason to believe the bears are going to roll over and die and give up without a fight. It's on the bulls to prove everything because we are in a bear market. So the bulls are going against the very strong downtrend that has been established all year long. If the bulls start getting the bull breakout, we will instantly become more bullish, but right now it's time to let the price action do all the talking, and we need to wait for a clear break in either direction because we know which levels we need to watch, and now we need to see the price action confirming it. So be patient, manage risk, and remember that discipline is the best way to make sure you stay a profitable trader. Don't forget I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.